Hello, everybody. So, welcome to the market briefing for the weekend. Today is Sunday, August 21st. We are going to dig into the markets and see. We'll talk a little bit about what happened last week, what we're expecting coming up this week. So, I hope you enjoy the show today. We'll get right into this here right after a little disclaimer. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here today are my own personal opinions and not to be considered advice to buy or sell any security. All trading and investment decisions are your own and done at your own risk. All right, we got that out of the way. Let's look at what's coming up this week. On Monday, nothing. No economic reports, not in North America anyway, and really internationally nothing important. If there's some global macro stuff going on over the weekend, but I don't even want to get into that. It's got to do with Ukraine and stuff. So we'll see. So Tuesday we have Flash Services PMI. PMI stands for Purchasing Managers Index. These things are a good, traders and investors watch these PMIs for clues about, the health of the economy. So, this will give us some clues to whether or not we're actually in a recession, that sort of thing. So that'll be fairly closely watched on Tuesday. On Wednesday, we have durable good orders. Some people will watch that. It's about the biggest thing that's going on Wednesday, and Wednesday's pretty. Most of the week, or the first half of the week, is pretty slow from a macroeconomic standpoint. However, on Thursday, we get a second look at Q2 GDP. Now, if you remember, 3 weeks ago, I think it was, we had our first look. We have first look at what they call advanced GDP, which is a very early look at that Q2 GDP. Well, it gets revised 3 times, or it gets revised twice. You get your first one, and then you get 2 revisions of that. And so this is our second look at it. So this will be quite interesting. This will be watched very closely, especially if there's, and reacted to if there are changes from that initial look that we had a few weeks ago. So this is going to be watched closely. Also on Thursday, we have the Jackson Hole Symposium starting. Now, if you don't know what the Jackson Hole is, it's like the Lollapalooza for central bankers and economists. It's their big event of the year. They come in from all over the world for this event. And you can see on Thursday, if this is Lollapalooza, on Friday we have Jay Powell speaking, so that's like, I don't know, Green Day coming back and playing at Lollapalooza, right? It's, Jay Powell is the big event at the big event. So that is Friday, so that's going to be very closely watched as well. That could be big, and it's Friday afternoon as well. I can't remember what time it was. I will put this in. This is definitely going to be in the morning briefings, so keep an eye out for that. We'll be talking about it in the Discord as well. It's so important because he's going to be talking about the economy. He's going to be talking about monetary policy. He's going to be talking about all the things that the market wants to know about. So it'll be watched very closely. On Friday morning, before he speaks, is Core PCI Price Index. And you guys should remember that, sorry, I said PCI, I meant PCE. The Core PCE is the Fed's favorite inflation measure. Okay, they're not a big fan of the PCI, but they do like PCE. So that will also be watched on Friday. So Friday's a big day. Could be a wild day, so it should be fun. All right. As far as earnings goes, so last week was kind of light. We had a lot of retailers, big retailers, but that was about it, right? And a lot of third and fourth tier kind of names. This week we have a lot of good second tier names. We kicked that off with. After the close on Monday with Zoom, Palo Alto Networks, is closely watched. Not too much else happening on Monday though. Tuesday before the open, we've got Macy's. We've got, JD.com, I should have highlighted that one actually. JD.com is going to be really closely watched, and anybody who's paying attention to, the Chinese companies is going to be watching JD.com. And then we've got, some more retailers and whatnot on Tuesday. And after the close, we've got Intuit and Nordstrom, Toll Brothers, one of the big home builders. What else? Petco, maybe some people will be watching that. And Wednesday after the close, we've got Nvidia, that's a big one. Salesforce, another big one. Snowflake, that will be closely watched. Even Autodesk, Splunk, those will probably be fairly closely watched as well. Thursday before the open, everybody's going to be watching Peloton, right? We also have a couple of the dollar store players, Dollar Tree and Dollar General, also on Thursday before the open. Some more retailers, more specialty retailers. ANF is in there. On Thursday after the close, we've got Affirm, we've got Marvell, Ulta Beauty, Dell. I mean, these are all really familiar names here on Thursday after the close. And then Friday before the open, Jinko Solar, one of the smaller, I guess I have mid-size solar players. Another interesting week for earnings, but earnings season is going to be coming to a close soon. This is probably the last of the good weeks of the earnings season. So let's get into looking at some charts. We'll take a look at the major indices. We'll look at some important commodities. Guess which my favorite important commodity is. We'll be looking at all of the sectors, the major sectors, and we'll look to see if there's any nice setups. And not a lot. I do have some setups and some new setups for you, but a lot of the setups in almost everything except the energy sector were kind of broken a little bit on Friday. They just will need a couple of days maybe to rebuild, unless we get a sudden turnaround on Monday, which is possible because on Friday we had OPEX, monthly options expiration. So it is possible that we could just rally right out of the gate on Monday and have a nice big green day, and all these setups will start looking good again, and then I'll be talking about them in the Discord on Monday after the close, setting us up for Tuesday, right? But as it looks now, we're a little light on setups, but we do have a few things to show you. So let's get right into our charts. We will start, as always, with the S&P 500. Okay, and you can see how we had kind of a choppy day, and just looking at these candles, it was a lot choppier than it looks here, in my opinion. And it was a really good day to stay away. And if you notice the morning briefings, if you read them all week long, you would have noticed me getting more and more bearish as the week went on. And then we did finally gap down on Friday and had a fairly red day. Now, this red line here is the 50% retracement from the all-time high to our June low. So you can see we closed right at that level. That's an important level. It's an important level that people have been watching, because any time in a bear market that we've gone above that level, we have not made a lower low in that bear market. It's basically spelled the end of the bear market. Now we can pull back a ton without making a lower low, but I don't think we're going to pull back a ton. I think a big pullback right now, or a likely pullback, would be, if this continues down, would be into this 417 to 415 area. So 417, you can see I've marked that pivot. This is the pivot high from back in this consolidation. That's about 417 and a half. And then 415 is the sort of the box on this consolidation here. And it's also where the 21-day moving average is. So I think that's a reasonable pullback if we keep coming down. A big, nasty pullback would be down into this 408 to 406 area. the bottom of this consolidation that we had back in the earlier in the month. That would, to me, be worst case scenario. And you can see we would have in that area, or just above that, we would have support from the 0.382 Fibonacci retracement. That's in around 408. We've also got the 100-day moving average in there at about 408.5. So there's a lot of support below us here. There's no reason to become extremely fearful. But as you'll see, this little pullback, or this, what started with a sort of a consolidation, and then Friday, the down day, it affected smaller caps a lot more than the large caps, and it definitely affected growth stocks. So if your portfolio is heavy in growth stocks, you took a hit in the last week, and you were probably feeling some pain. But I don't think that's good enough reason to be fearful just yet. There's nothing I see on this chart that says this market is ready to roll over and go to new lows. It's just a very similar story for the NASDAQ, if that chart comes up. So the Qs, you can see, they were mostly down. Had a few down days here, but they chopped around doing that. They've come down to their 382 retracement. We've got some more support below those as well. So there's no reason to believe that this won't bounce up again and continue on its merry way. And we could even, if we were so inclined, we had this cup and handle in here, right? And we were predicting this cup and handle would break out to the upside. It did. Long term, though, we are expecting this cup and handle to go much higher. This measurement on this cup and handle would take us out near the all-time highs. I think up around this 370, not quite all-time highs. But do we have an even larger cup and handle now? It's a little bit messier, but it's certainly here, and that would put the rim of the cup somewhere around here. That would put this as a handle. Why don't we just go ahead and draw that in? So our cup starts somewhere here. All right, it looks something like this, and then we've got a handle here. And so we expect this handle to pull back, but then we expect this to break out to the upside of this. No reason to believe that won't happen after a little pullback here. Let's look at IWM, the Russell 2000 small caps. And we can see that the pullback was a little stronger here. Got a little deeper. And we could do the same thing, we could extend this cup. We could make this into a bigger cup, and then this is now our handle. And I think that actually fits this better. Let's just actually move that up to here, and, that's what that would look like, right? So, just like in the Qs, we probably need to redraw this cup and handle so that now this is the handle. And, when we do that, that looks like a bull flag. And we do expect that at some point to break out to the upside. And that's what I'm expecting. I see no reason that this wouldn't continue on its way on the upside. Maybe it's got to pull back a little more. Maybe it's got to pull back into this 188 area before it then turns and goes up. And with everything we've got going on later in the week, we probably have another choppy week ahead of us. We also got to look at the time of year. It's getting into late August. We're in the second half of August. August is one of the worst months in the market. It's very slow. Volumes drop off. Let's take a look at the volume in SPY here. Now, we're going to see a little spike in volume on Friday, but you can see here volumes dropping off. The farther we get into summer, volumes drop off, and the farther we get into August, volumes continue to drop off. And when there's less volume, there can often be more volatility because there's fewer people participating in the market, so you can get these large swings and you get a lot of choppiness. I've always had a hard time trading in August. It's late August is one of my least favorite times of the year to trade. I'm a momentum trader. I like trading breakouts. That's my style. Those are my favorite kinds of trades. So anytime the market gets choppy, I get chopped up if I let it chop me up. And so this is one of the reasons I was doing very little trading all week last week. I was expecting it to be choppy. Right from the start, it was pretty much looking choppy to me, and so for me, it was just hands off. And if there's nothing wrong with that, sometimes the best trade is no trade. So if you don't like choppy conditions, don't take a week off, have a little holiday, because I think there's going to be more chop. Now, it might get a little exciting. There definitely be some good trades, Thursday, Friday, with what's going on. There'd be some good day trades in there. But, if you're an investor or a longer-term trader, you don't have to play when it's choppy. It's okay to take a little break from it. But as we get into September, so it's usually from mid-August into the end of the first week of September. Once we get past Labor Day, all the traders and all the institutional guys, they all start coming back to work, and the volumes start picking up again, and we start getting moves, that sustain for a while, and we should get back into more trending markets and less chop. Okay, so I think that covers markets mostly, or the major indices. We haven't actually looked at the VIX yet, though. So on Friday we saw in the VIX, so you can see that the VIX, we've been consolidating, and where the market was consolidating, the VIX has started to consolidate as well. Now, you can see that we had a little spike up, okay, and that pulled back. So that's a positive sign. So now some people may say, wow, this is a beautiful base that this is drawn here. And they might think that is bullish for VIX. Okay, so here we go. Here's this nice base. And they might say here, we're forming a base at support, this $20 level, really important level. This means that VIX is going higher. And I wouldn't agree with that. I'd actually, be more inclined to say, no, this is just another consolidation like we've had many of on its way down, and will eventually resolve to the downside. I think this probably goes sideways with the market, over the next week or so. But eventually resolve to the downside. And let me show you a little trick here. I mean, if you're one of the people who sees this as very bullish and this going up, and remember in the VIX, I mean, it's everything is the opposite, right? So if it's bullish for VIX, it's bearish for the market. One of the things you can do is take your ticker, your VIX ticker, right, and divide it by 1. 1 divided by VIX. All right. So what we're going to do is we're going to invert this chart. So if you're one of those people out there who's seeing this as bullish, okay, then you should see this as very bearish. So does that look bearish to you? Certainly doesn't look bearish to me. This looks like a bull flag right here, right? This looks like something that is going to break out to the upside and continue higher. Yeah, I have a really hard time, believing that that VIX is about to spike up and run away from us. And just this little exercise is one of the things that you can do, and you can do this with your stocks as well. If you're wondering, if you look at something and you think maybe a bottom is in, and then you invert the chart like that, it should kind of really be an eye-opening experience and wake you up. And again, all you have to do is just take your ticker. You go 1 divided by whatever ticker you want to look at, and that inverts the chart. You can do that on. I haven't seen a platform that you can't do that on, but you can. You've seen me do it on eSignal. I know for sure you can do it on TradingView. I'm positive that you can do it in Thinkorswim as well. All right, let's move on from VIX into TNX. The 10-year yield. This is where we start getting into some of the scarier stuff, though. This is where I start getting, this is where I'm more short-term bearish. And if this continues, I will have to get intermediate-term bearish. But But at the moment, I'm short-term bearish and intermediate and long-term bullish. You can see that VIX has been, over the last few weeks, kind of slowly rising, grinding up here. Has some big days followed by some little tight range days. We had a big gap up here on Friday, and it's now just crossed over its 50-day moving average and looking like it wants to go higher. So if the 10-year yield is going higher, this is not good for equities. This is bearish for equities, right? We don't want to see these yields going higher. It's suggesting that the bond market is pricing in higher rates coming from the Fed. Now we know the FOMC meeting, and the next meeting is not until September 21st. So what is that? That's actually exactly a month from today. So that's still a ways off. So there's still lots of time for everybody to start or try and price this in and speculate where rates may be. Plenty of time for that between now and the meeting. Our next indicator that I'm not thrilled with is the dollar index. And this has been shooting up. Now when you look, if you take a look at the dollar index and you overlay the S&P 500 or any other equity index on top of that, you will see when the dollar index is going up, the equity market is generally going down. Okay? And when this bottomed right here on August 11th was pretty near the top of the market before we started to consolidate. Let's just take a look at the SPY here and see what the what was the date of that top? Okay, August 16th. And then we started coming down. Go back to our dollar index. Oh, that's right. Yeah, it was in here after this big day. And then, these days here is when the S&P 500 started to kind of, grind a little bit to the downside, then even accelerate on Friday. So anyway, our dollar index is coming into its most recent high. And this is a fairly long-term high as well. It should find resistance here. I'd be a little surprised if it broke through here. If it broke through either, I mean, I don't think it breaks through the 108.70. Maybe it gets through that pivot high right there, or sorry, maybe it gets through the 108.70 and comes up and meets this pivot high right here. Let's just throw a line there as well. Oops. I really don't think we break through that. If we do break through that, I start to become quite concerned for our equities longer term. So this is something I'll be watching very closely all week until this rolls over again. And you should probably be watching it too. James Hawk in the Discord was telling me earlier in the week. He says it's the dollar index because he's figured this out. He started watching it. He started watching the dollar index and realized that there is a tight correlation right now between equities and the dollar index. And he says first thing he does in the morning when he gets up is he looks at the dollar index to see where it's at. And if the dollar index is going up, he knows the stocks are going down. So this is a good thing. Good observation on his part. And a good thing for you to be watching as well. All right, let's get into, one more thing here. Our DCA, dollar cost averaging timing tool. All right, everything's still green. MACD's still, well on its way up, well above the our moving average here, our 20-week moving average. Everything looking good. This is the S&P 500. No difference in the Qs. And no difference in the IWM. So no reason to be concerned that this is going to roll over and turn red again anytime soon. A very large pullback though, a large and sudden pullback could certainly change this to red, but I just don't see that coming. All right, let's move over to some of our commodities. We're looking at gold here. We talked about how gold was looking like it was topping and rolling over, and it certainly did that this week. It's pulled back quite a bit here, and showing no signs of slowing down. However, it did pause at the support resistance line. The gold miners are not looking great. These could come in and make new yearly lows soon. You can see we have that low from back in July. That looks like it's going to be tested fairly soon in the gold miners. Silver is looking quite ugly as well. Tried to break out of that bull flag, couldn't really get going anywhere, and then just lost everything and has pulled back, fairly hard. But coming into an area of support in this, this $19 area here. Should probably actually draw a line on that, shouldn't I? I think the support level right here should be pretty obvious to everybody. Okay, so we've got support there. Maybe that'll hold. I don't know. This has got a lot of downside momentum. I think it needs to come down and test these previous lows here. All right, copper is looking healthier though, and copper really is. Silver is a bit of an industrial metal. Copper is the big industrial metal, and if copper's doing well, then we can't be too concerned about the economy. And copper seems to be hanging in, and even had an up day on Friday. It's made a little consolidation. Not the best looking bull flag here really, but it does look like it wants to break out and go higher. This is good after this strong pullback that it had when we were all becoming very concerned about recession. This has definitely been making its way back up again, and putting in higher highs and higher lows. So a move to the upside of this, I think, would bode very well for the equities market. DBC, the General Commodities ETF, is continuing to just chop sideways and be messy, so there's really nothing to see here, nothing to do there. Same pretty much goes for the agricultural commodities. It's a little messier. It had a bad few days and started to bounce a little bit, but really nothing to be done here. It's not something, don't want to be playing the whole space. There probably are some opportunities within this, but I haven't found anything particularly interesting. All right, let's move on to crude oil, because I think this is where all the interesting action is. There was definitely some interesting action in this over the past week, and I think there is more to come. And I think this is, we're really going to find out what's going on with oil here. Has oil put in an intermediate term bottom? Did it do that on Tuesday? And, do we move higher from here? So when we're looking at the oil chart, we're seeing a downtrend. We are seeing a lower low, and we're still seeing lower highs. So whenever we see this, it's firmly in a downtrend, and there's nothing to suggest that downtrend is ending. However, it does look like momentum is slowing, and we have a hint of actually not even a hint. We actually have an RSI divergence. If you look here, so if we go from this low. See how that is ever so slightly sloping upwards, okay? So from this low here, we made a lower low, but RSI actually made a higher low. So that is showing us, and you can also see, that this leg down was smaller than this leg down, okay, and some of these other previous legs down. It's indicating slowing momentum. The volume on the last, see these three down candles here? Look at the volume on those. Light compared to these green candles, right? So, coming down on lower volume, didn't come down as much. And when we look at when we dig into the energy complex a little more, you'll see that there were hints that this was coming. Okay, so, but crude oil is what everything is usually based on here. But other things have been telegraphing that crude oil is on its way back up, that the bottom may very well be in. All right, so that's my thesis now. You know I've been waiting for this, and you know, having gotten out of all my energy plays earlier when you know, when crude oil looked like it had topped, I've been waiting for a place to get back in. Now, there's still a lot of resistance overhead in crude, and it could you know, completely fail. So we're a little bit early here, perhaps, but we are seeing some signs, and this may be a case where the early bird catches the worm. So let's look a little deeper in here and go into XLE, the energy company ETF. Do you see the difference in here between this and crude oil? You know, look how this bottomed way back in July. It has put in now higher high, higher low. Here we are, and you know, we've got this higher high here. We even broke out on Thursday. Broke out of this little pattern above resistance. Things are looking much better here in the energy companies than crude oil itself. Okay, let's look at XOP, and this is the subsector within this that has been outperforming both XLE, the main sector, and crude oil. And this is partly because there's a lot of this is the oil and gas production companies. Okay, so a lot of this move will be from the gas component of that, but this is strong. You know, this has been a really nice move and continues to be a nice move. I bought some of this ETF first thing on Thursday morning on this breakout above here, and I announced that in the Discord. We talked about it a little bit in there. Friday we had a little bit of a pullback, nothing major. A little inside day here is fine. You know, it sets us up for a move higher. Even a bigger pullback is fine to me. You know, if this pullback and retests this former resistance, then becomes support and then turns up, I'm totally cool with that. If this fails through here, I will probably stop out of this trade and wait for another setup. But this is a trade I would like to be in for the intermediate term. I think that through the winter and well into next year, there's a lot of macro catalysts that could take the whole energy complex, especially the oil and gas related part of that, much higher. And so I want to be in this space. OIH is the oil services company's ETF. This is not doing quite as well. Hasn't quite broken out yet. May continue to do so. But I want to concentrate my efforts on companies that are within XOP, these oil and gas production companies. Those are the ones that have been the strongest and look like they will continue to be the strongest. We should also take a quick look at TAN, because TAN is the solar company's ETF, and any time that oil is going up, TAN generally goes up as well. It's not a perfect correlation, but you can see that TAN has been doing well. It had gapped up, it had been putting in this nice base, it tried to come out of that base, and it sort of pulled back into it. Now we're probably finding some support here at the 21-day moving average. I want to see where we're going from here. If oil moves higher, I think the TAN is going to continue higher as well. So if you have moral issues with oil itself, this might be a play, for somebody who's more into the ESG kind of thing. But I think the real money, if there's money to be made here, I think it is in something oil related, unfortunately. All right, let's take a look at natural gas, because I was saying the oil and gas producers is where I think opportunities are. I think that if we really focus in a little more, we're going to see those opportunities in companies that are doing a fair bit of gas production. And you can see, so these are the natural gas futures. We don't normally look at this, but we probably should have been, and I think we'll be looking at this a little more. You can see that we've come up and made a triple top, right? And we're currently making a triple top, but what are we doing here? Let's get this resistance in here. Okay, so obviously we've got major resistance right up here. We've come into this 1, 2, and now we're working on our third time. But what is it doing right under resistance? oops, it's drawing a base, right? Nice tight consolidation, fairly tight. Fairly tight consolidation right under resistance. You guys have been here long enough to know that I love this. This sets up a nice. This sets up for a nice breakout. You can get a really strong move, from a setup like this. Let's get a couple of more days. Let's get it up a little tighter. If we can get 2 or 3 really tight days right under this line, I will be thrilled about that, because that could give us a really strong breakout out of there. All right, so how do we want to play it? We probably don't want to be playing around with natural gas futures. You could look at something like an ETF like oil. Would be one way to play that. It doesn't track as you can see, it doesn't track natural gas futures perfectly, but it's reasonably close. So that might be a way to play it. And it's got good volatility, and you could get a good move from here. I want to get into a couple of these companies though. One of the companies I'm looking at, I really starting to like this one. This is Magnolia. Now NS in the Discord, he mentioned this. Was it yesterday? Anyway, he mentioned a few of these companies, so I want to give him credit for that, because he's also been quite bullish on this space, and so I saw him mention this, and I took a look at it myself. I looked at the chart, and you can see not as strong as natural gas itself, but it's a pretty decent setup. It's pulled back from its highs when natural gas did. It's come up. It's made the higher high, maybe making a higher low now. We just got to break out of here, and this confirms the higher low. But consolidating right under that resistance that we put before a breakout out of here. I got to be a buyer on this, and I did a little because I'm thinking I'm going to be in this for a while. This is a swing trade that I expect to be in for many months, maybe even a year. So in something like that, I want to do some fundamental research, and that's not something we usually talk about here, right? Or at least not in the our weekend update. But I just quickly want to show you the fundamentals on this company, because they just look outstanding. I'm going to go over to Stock Unlock here, and you can see that dividend payout ratios and stuff like that are good. That's not really something I'm concerned about on a medium term or longer term swing trade. But you can see our valuations. Look at, almost everything, our PEs and everything are below average. Even as much as this has gone up, our PEs are below average, right? So these, everything in here is very good. Growth. Look at the growth is outstanding, of course, right? As it should be. If there wasn't outstanding growth here, there'd be a serious problem. But we got 5 out of 5 on our growth, right? Revenue increasing 103%, net income 272%, free cash flow increasing at 161%. Our book value is up, our tangible book value is increasing. If we move over here to financial health, well, you can see our current ratio 2.25. I'm surprised. Whoops. Close that down. I'm surprised that only says good. I think this is great, especially for a company in the oil and gas. Now, the one thing I really don't like, the big red flag here, is shares increasing. These guys do a lot, or it looks on my quick look, looks like there's a lot of stock-based compensation going on in here. So there's a lot, insiders getting paid a lot of stock and then selling their stock. Although they have not sold. There's only been one insider selling since end of March, and he hasn't sold anything since June. So that is actually a good sign. But we don't want to see, generally don't want to see shares increasing this quickly. But when we've got revenue and price increasing that much, it kind of it overwhelms the float increase. So anyway, financially they're in great shape. You can see over here, analysts love this company. 4.4 out of 4. Or out of 5. That's pretty good. And then our returns, another 5 out of 5 here. Look at this. Return on invested capital, 90%. Return on capital employed at 54%. Return on equity 62%. Return on assets 32%. Where did our margins go? Did I skip over margins? Oh yeah, here. Profitability factors. Gross margin 80%. Operating margin 63%. Our net margins 46%. Free cash flow margins of 50%. I mean, these are just some outstanding numbers. Granted, we should be seeing great numbers out of any company in this industry right now, especially when they've got a fairly large gas component to their business. But, you know, this is one of the better ones. So I'm really liking what I'm seeing here. And, you know, I am quite confident taking a longer-term swing trade on this, a swing trade that I could hold for a long time. Now, this is not investment advice, of course, but I just wanted to let you know where I'm at with this guy. All right, so that's Magnolia. You know, the play here is pretty obvious. You got to buy this breakout, and you know, you got to decide where you're going to put your stop. If you're any tighter than below this big green bar, I think you're way too tight. And I think, you know, being longer term, I'm probably going to go smaller and have a wider stop, probably below this little 3-day consolidation here, or below the 200-day moving average. I think would be a good stop for me personally. But like I said, I mean, you've got to decide that for yourself and your risk tolerance. All right, let's get into another one. This is EQNR. Now, this one's an ADR because this is our Norwegian company. Norwegian oil and gas exploration and production company. I like that they're in Europe, right? I mean, they are right where all of the energy action is going to be happening this winter. And they are about to break out to new, I believe it's new all-time highs. Let's go back. Okay, they have been higher than this very briefly back in 2008. All right, so that could come back and haunt us as resistance, and that may be why we have stalled out there currently. But you know, look at this; it keeps coming and, you know, banging on the door here, right? You come up and bang on the door enough, and eventually you're going to get through. And this looks ready to go as well. So, you know, this may be something that I just, if this is starting to move up on Monday, or, you know, earlier in the week, and, you know, oil and gas is still looking pretty healthy, I may just jump in here early, because I think when it breaks through here, it's going to go fast. It's going to run a bunch of stops, and it may even gap up. Remember, this is a Norwegian company, right? So this opens like 6 hours or whatever ahead, 4 hours ahead of the New York market, and that's why this chart looks kind of gappy, because it's, you know, it's trading over in Europe before the North American markets are even open. So, oops. Yeah, this is another good one to watch, and go check out the fundamentals on this too. Fundamentals look really good, not quite as juicy as Magnolia, but still pretty sweet. So I think that you know, these are two plays that I'm ready to jump into in the energy space. All right, let's move on from there and take a quick look at discretionaries. So consumer discretionary. Nothing to do here for me. You know, they're just taking a little break, and you know, we could call this the same sort of, you know, similar looking cup and handle that we were looking at in the major indices and everything. But I don't know, it's just not a space I want to be in right now. Let's look at industrials. Very similar story with industrials. You know, very healthy, stair-stepping up, but I just can't find plays here that I like. And I don't really want to play the ETF. And you know what? I mean, it looks really nice, but the reality is it's kind of been underperforming the S&P 500 and some of the other sectors anyway. But yeah, it's a good strong move that it's had, and there's no reason to think that this won't bounce and have another leg up. But maybe it is due for a longer consolidation. Financials, I'm still kind of liking the financials, although this was a big pullback, too big of a pullback for my liking on Friday. It did find support right at this first gap. We've also got another gap down below, and then we've got some moving averages here. So, I think there's going to be good support in this area, but it does look like it could have another couple of down days in here, right? A couple of the stocks we were looking at there were Goldman Sachs, and you can see that rather than breaking out of this little bull flag we were talking about, it has broken or tried to break out to the downside. It did bounce a little bit. So don't take this off your list if you were watching it. Keep an eye on this, because this may turn out to be a failed breakdown and then turn around and go right back up through here. So I'd be definitely over the next couple of days on a close watch out for that. Morgan Stanley is another one that we were looking at, and this one's still got a nice bull flag. Hasn't really quite violated the bull flag, and look how it's getting the support at right at the 200-day moving average. I can certainly imagine this turning around and moving back up. I can also imagine it coming back down, blasting through some of these gaps, and testing this 21-day moving average as well. So jury's out on this one. What might be a better bet if you really want to play in this space? One of the non-bank financials, that'd be MasterCard. Nice little pennant going on here. It did have a down day on Friday, but not as bad as we've seen in some of the other financials, right? This could easily turn around and break out of here. So this might be worth adding to your watch list if you want to play around in this space. Let's look at technology. Much like, looks very much like consumer discretionary, nice move up, stalled right out at the 200-day moving average, and, had a big down day on Friday. Gap down and kept going down. Not terribly healthy, come through some minor support. This may have to come down and test this former downtrend line that it broke out of. And you see you've got the 21-day moving average there as well. So don't be surprised to see more downside in technology next week. Same goes for communications sector. It's actually looking worse to me. It had a little bit of a breakout. Couldn't really get going anywhere. It got stalled out on the 100-day moving average. It rolled over a lot earlier in the week, right? And now it's broken the uptrend line that it had drawn. So not healthy. Is it going to come down and test the 50-day moving average? Kind of looks that way. But you know what? It did bounce a little bit and close off the lows on Friday. So tough call. Not somewhere I want to play right at this moment. We'll take a quick look at some of the stocks that are in these sectors and in tech and everything. You can see that Apple pulled back on Friday. Remember that Apple's got their big product day, their fall product day on September 7th, so coming up in a couple of weeks. Wouldn't be surprised to see Apple pull back to the trend line, possibly bounce there. I kind of think more likely it has a bit of a deeper pullback. I think it breaks through that trend line and freaks people out and comes down to the 21-day moving average. Don't forget that 21-day moving average is going to be moving up as well. So when they meet, it'll probably be, in around here. Another couple of down days in around here. This would scare people though. But I bet you it bounces in here and moves back up. Amazon not looking quite as healthy. You can see it is kind of rolling over a little bit. I think there's at least one more down day here. Come down to the 21-day moving average, possibly, checking out this gap. Meta just kind of continues to be so meh. It's kind of it's had a couple tries now breaking out of this space, and it keeps coming back into the base. So, you know, maybe we need to expand this base. I mean, maybe this base just isn't drawn properly. I don't really want to be expanding the base, but maybe the real base is looking more like that, right? So anyway, it's just going sideways, swinging around. You know, mean reversion traders can definitely make money in here. That isn't really my style. I'm not good at that. But if you're a mean reversion trader, keep an eye on this thing. You know, sell it at the top, you buy it at the bottom. So there can be trades there. Even in, you know, when they're chopping around, you can still find trades. Netflix I like. You know, we've been talking about these tight consolidations. We broke out of this one. We talked about how when it broke out of here, it probably goes up into this gap and stalls out right at the beginning of the gap. Sure enough, that's what it did. We've pulled back a little bit. We're not pulling back. You know, we're not pulling back much. We're having these tight little choppy days. I think there's a really, really good chance that we turn and continue back up. And I want to be, you can see I've got an alert set here. Very aggressive traders would be buying above the high on Thursday. I've got an alert just set just above there. I want to watch that. I'm more interested in this these two highs from earlier in the week. I guess this would have been Monday and then the previous Thursday. That's the level that interests me more. That's around 252. So, you know, could be an interesting play in Netflix coming up. So worth keeping an eye on. Google, I don't think there was much going on there. Yeah, you know, sort of another one of these mean reversion kind of trades, right? I mean, you know, you see this channel in here. You know, you can sell when it gets to the top of the channel, and then you can buy when it gets to the bottom of the channel, you know, if it gets back down there. We kind of don't really want to see it get back down to the bottom of the channel, right? I actually like to see this, you know, turn and move up a lot sooner than that. Tesla. I think Tesla's fortunes, in my opinion, are still tied to Twitter. You know, that there's been a fair bit of correlation or inverse correlation between the two. And you can see we've kind of put a bit of a double top here, or maybe even triple top, right? And roll over again, and on Friday broke through a short-term uptrend line, but recovered quite a bit of that. It gapped down, and then it continued down, and then it recovered and went up. Has drawn a little bit of a hammer. You know, I wouldn't put a whole pile of money on that hammer, but you know, it is a slightly bullish sign in here that maybe this could try and make its way back up and reclaim this trend line. You know, there is a pretty decent support level here at around 860, and you've got the 21-day moving average. I don't know. I don't think there's enough here right now to be making a call on this. All right, semiconductors. You know, they really kind of they've had an up and down, you know, couple of weeks, right? They've been chopping around. It's been a very messy kind of consolidation. And you know, it looks like this former downtrend line is acting as support. We've got some moving averages in here, but we really need to see this turn up soon. But yeah, a bit of a choppy mess right now. The best looking one in here, and even though they had a pretty ugly day on Friday and broke down out of this pennant we've been watching, but recovered a little bit and closed right on the 21-day moving average. So it's possible that AMD could try and stage a comeback here. But this is sort of one of the... there are some others that look good, like, you know, we've been watching PI. You know, PI is way up at near all-time highs. I just think it's hard to get in that after this huge move, right? So yeah, there's some good stuff going on in that space, but I'd rather see the good stuff going on with the big ones like AMD and NVIDIA. XLV Healthcare, not really liking the space right now. I think that really we should probably actually turn this line here into a major resistance line, which I think I will do. There we go. Yeah, I think it's going to have trouble getting through here. I think there's more downside in the short term, short and intermediate term for healthcare. When we look at biotech, biotech has really rolled over. We were looking at this bull flag, and it's basically broken out the bottom of that again, right at resistance. Maybe we need to turn this line into a major resistance line now. Something that it's going to continue to have trouble getting through from the looks of it. Now, that being said, it paused on Friday right at this uptrend line and the 21-day moving average. So if it's going to bounce, this is the place it could do it. So this is potentially an opportunity if you're very aggressive and want to be in this biotech space. A green day or something that goes, say, red to green on Monday, that could be a very good trade for you. But I'm kind of not leaning that way. I'm sort of leaning more to more downside here. Maybe a consolidation above this previous consolidation, but I don't know. I just feel like this is not ready to make a move here yet. REITs. So the real estate sector, rolled over a bit last week. It's pulled back a bit. Again, I think this probably has some more sideways. There are areas that should support in this, and it's not a space that excites me anyway. Staples have been strong, and you can see that they had a strong week. They broke out of their consolidation, come up. Now they're putting in a bull flag. Now, Staples is a very defensive sector. This is not something we wanted to see doing especially well, right? And it's not something we really want to see breaking out of this bull flag really strongly either. But, it is what it is. There's a bull flag. We expect that to break it out to the upside. And it could be that, if the rest of I'm cool with this bull flag, resolving to the upside, if the rest of the market is also going up. But if Staples is one of the only things going up, that probably means that the rest of the market is going down, and I'm not going to be thrilled about that. Utilities, the same kind of deal, right? Utilities is a very defensive sector, and we are up at, not sure if this all-time high is definitely a one-year high that we've put in here. Yeah, this will definitely be all-time highs on this one. So yeah, utilities, very strong. Also, very defensive. So that's a little bit scary for the market overall. One final one. So I've already been through all the new setups, and they were all basically in the energy sector, as you saw. One that we had looked at last week, or for the last couple of weeks actually, is roadblocks. And at first look at this chart, you kind of look at this and you go, okay, yeah, we had a nice uptrend going. It hit some resistance and it rolled over. It's broken through the uptrend line. But I like where it stopped on Friday. Even though Friday was a fairly red day after five previous red days, not very healthy, lots of momentum to the downside. I just like where it stopped on Friday, and I think that this has the potential to be strong support. I think that if this bounces on Monday, even if we cut through this a tiny bit and go red to green on Monday here, this could be a really strong move out of here. I think this is worth watching on Monday. For day traders, a red to green should be a good trade. For short-term swing traders, a red to green should be a good trade. And for anybody who's invested in this, is looking to add even, this could be an aggressive entry or aggressive re-entry, an aggressive add onto your position. Only if this goes red to green, and it's got to do it strongly, and it's got to do it with good volume. So you want to be looking at, if this happens, you'll want to be looking at your RVOL, and make sure that it is putting in well above, say, like 2 times volume as it turns green. That could be something exciting and worth a watch on Monday. All right, I think that is all I've got for stocks to be looking at. Okay, let's move over here. What do we got coming up? Coming up next week, we have on Thursday, we have Ticker Talk, and we're also throwing in a quick little market update as well, where we're doing the Ticker Talks on Thursdays, and we're going to be moving week after next, so probably for the 31st, going to be moving Ticker Talks over onto Wednesdays to get that market update, sort of a more midweek thing, right? So we're looking at it at the market twice a week. So hope to see you all there, and hope that you enjoy the rest of your weekend. Thanks, everybody.